on Business Incorporated today. Six countries agree to interoperate on Africa digital identity. Nigeria's dollar bonds post biggest losses in emerging markets after changing plans to remove energy subsidies. And Zimbabwe sets for its digital gold tokens. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. Well, we start as usual with market numbers and we see what's going on in Africa. It's a negative one for the NGX Nigeria there after closing last week in the positive. It's down more than 0.5%. Also, South Africa down also 0.63%. EGX 30, however, is on the flip side. It's marginally up 0.05 and Kenya closed almost 1%. In the negative. We slide over to the Middle East now and see where major equities in that market are trading negative at intraday. Abu Dhabi is almost 0.5% down. Dubai, worse than that, 0.84%. And then we move over to Saudi Arabia, where we see also in the red there 0.90%, and Qatar is in the flip side 0.38% at intraday. Let's go over to Europe now, where hundreds of thousands of people took to the streets in Europe yesterday, the Labour Day, International Workers' Day, to protest against cost of living, wage inequality, and pension reforms. We have Andrea joining us a second time this week to give us more on how it started and how it ended. We'll bring Andrea later on the program. Moving on now, let's look at other markets and see how that's doing at this time. Okay, let's go to London and see what's happening there. A little bit of good news. We hope it's real good news because we hear that the government there is on the brink of giving the NHS staff 5% pay rise. I hope this is true, and can this stop the strikes they've been reporting from the UK in recent times? We have Juliana joining us now. Juliana, good afternoon. Well, is this for real? Will it solve the problem?
It's a good question, Innie. It's a £1 million question, and we'll just have to wait and see what happens after 14 union bosses, as well as the government, end their crisis meeting. There is a meeting currently taking place right now. It's officially called the NHS Council meeting, but of course it is a crisis meeting because there's only one topic anyone is going to discuss, and that is the negotiation. You're right, the BBC just a couple of hours ago are reporting that Steve Barclay, the health minister, has finally moved, and the British government are offering NHS England workers, these are not just doctors, these are also non-hospital staff, so basically cleaners, everybody who works in the NHS, a 5% pay rise for the years 2023 and 2024. Now, there is some other detail, if you'll permit me to have a quick a glance in my notebook here. So what Stephen Barclay is offering union bosses is that 5% pay rise from 2023 going into next year. There'd also be a one-off payment worth about 2% of last year's salary, as well as an NHS backlog bonus, which is going to be worth between £1,250 and £1,600. Now, for some union bosses and for, I've got to say, probably hundreds of thousands of NHS staff, this is good enough. This is enough to stop the strikes that have been taking place for about 6 months now. And it's come at a really crucial stage of the NHS. The NHS is already facing severe backlogs from the pandemic and the cancellation of pretty life-changing appointments. We know that the first strike, over 300,000 appointments were cancelled in just one day when junior doctors down tools a couple of weeks ago. 200,000 appointments were cancelled. And some of those appointments, Innie, just to emphasise, some people died some people died. Some of those appointments were their last chance saloon and they were cancelled. This is really, really serious. And I suppose in months and years to come, when there is an inquiry into why it got to this stage, we'll have to be talking about those who suffered from it. So that is what's been put on the table. We do know that thus far, 2 unions have rejected this offer already. And this is without finding out what's happened in that crisis meeting, which is taking place at the moment. This is Unite and RCN. Now, RCN have been pretty vocal, so most people who have been following the industrial action of the NHS are likely to have heard sound bites from the Royal College of Nursing. They are powerful, but in terms of numbers, they're quite small. So even if they reject the offer and Unite reject the offer, some of the big unions, such as Unison and the GMB, seem to show that they are going to accept the offer. So unfortunately, there is going to be a fracture between the NHS union bosses. But look, I think we're all starting to get a little bit sick and tired of these strikes. Even public sympathy that, the union bosses had a couple of weeks ago is beginning to wane. Again, today, for example, there is another a teacher strike. So I think the public definitely want this to be done and dusted, but particularly for the NHS, because, those cancelled appointments really do wreck lives. So yes, let's just wait and see what Steve Barclay has to say, but potentially some good news, as you said, Inni.
Yeah, well, we'll wait and see, certainly. But as you said, they may be losing the sympathy of members of the public because, it's their reality and they feel they have to fight for it because it's their life and their welfare we're talking about here. But let's look at the welfare of the markets now. How's that looking at intraday?
Pretty much a mixed bag amid intraday. We've had a slew of trading updates. The big one, which I discussed on Business Morning this morning with our colleague Laddie Williams, was the extraordinary profit update that we saw from BP. In the first 3 months of this year alone, they raked in $5 billion worth of profit because we know the energy crisis is fueling inflation across the world. Anytime a big oil and gas major report, it becomes a political spectacle because people are like, right, well, you're benefiting off, the cost of living crisis that people are going through. So lots of people not happy about that extraordinary trading update from BP. In fact, there were calls this morning from the Labour leader here in Britain, Sir Keir Starmer, to increase the windfall tax. He believes that Rishi Sunak has put way too many loopholes within it. So even though that BP are investing back into Britain, they could be doing so much more. I think he said that if he was in government, which is very likely soon, that he would use their profits to freeze council tax, which is such a strain for millions of households in the UK. We've also had an update from HSBC. So the blue chip index at intraday is up slightly by 0.01%, though the FTSE 100 is down by 0.07%, and the FTSE 250, the domestic market, is trading higher at 0.39%. In the currencies market, the British pound is currently trading down against the US dollar by 0.16%, down 2 against the euro by 0.06%, and the British pound at intraday is trading down against the Japanese yen Inni by 0.24%.
All right, Juliana, thank you so much for that, and we wish you all the best back there in the UK. All right, so let's head back to Europe, and where we told you that yesterday was the celebration of International Workers' Day, but it was a large protest there. Workers were protesting cost of living, wage inequality, and pension reforms. Andrea is now ready to join us to give us how it really happened while the world was celebrating workers when they had these demonstrations in Europe.
Is broadly the same. So better pay, better working conditions to face the rising cost of living all across Europe. In the UK, nurses staged their largest walkout ever for a dispute over pay, while in many countries workers workers' unions were also joined by demonstrations from LGBTQ plus associations and other civil rights movements in an effort to bring attention to broader societal issues. Worth noting that in most countries, demonstrations were largely peaceful, but in France, we've seen protests for a while now against President Macron's pension reform. The heat has been already on for longer, so to say, and there were clashes with the police in Paris and other cities, while some luxury brand stores were vandalized with spray paint.
So I do know that governments, the different countries have been making efforts. What are some of those things they've been doing to address these issues?
Well, let's start in France, where despite the ongoing protests, Macron's government is still going forward with a pension reform which will raise the retirement age from 62 to 64. Labor unions announced that strikes and protests won't stop even after the proposal is voted into law. In Germany, the government is aware of the issues and has been acting mostly through energy subsidies and actions like the flat ticket for public transport. For a lot of workers, that's still not enough, though, as wages are definitely not keeping up with inflation. In Spain, there is an ongoing push for a 4-day work week, while in Italy, the right-wing government just rolled back the poverty subsidies introduced 4 years ago amid a plan, so they say, to boost employment and pay rates. It's worth remembering that Italy still has some of the lowest wages in Western Europe.
And it's been a long holiday for the market, but they're open today. How's it looking like?
Well, as expected, the protests and workers' requests were not market movers at all. Investors are looking at the same central issue from a different perspective, we could say. All eyes are on the Fed's decision on interest rates on Wednesday. And then here in Europe, we're eagerly waiting for the European Central Bank's new interest rate hike on Thursday. The ECB clearly believes that a further hike is needed given the rampant inflation. At the same time, the banking instability ignited by rate hikes is again front and center after JP Morgan's takeover of First Republic Bank in the US over the weekend. So we'll be watching closely how the banking sector will react in the coming days.
Yes. That's right, Andrea. The banking sector is one sector to look out for this time. Thank you so much for that update. All right, let's move to the United States, where stock futures fell slightly on Tuesday as investors prepare for the Federal Reserve's May policy meeting kicked off today. And futures tied to the Dow Jones Industrial Average pulled back by 74 points. S&P 500, let's look at the numbers there, all in red. First glance shows us that Dow Jones 0.24% down at 34,069. S&P 500 also down 0.20%, and NASDAQ also down 0.08%. The Fed's two-day policy meeting is expected to conclude with the central bank announcing another 25 basis point rate hike. And we know that traders have been pricing this in. They're pricing 97% chance of that rate hike. Investors will be looking for clues on whether the Fed will keep rates steady after this meeting or if it will further tighten monetary policy to fight inflation. Asia markets now. The Reserve Bank of Australia unexpectedly hiked its cash rates by 25 basis points to 3.85% after holding its benchmark policy rate at steady 3.6% in their April meeting. The Australian dollar threatened by this, 0.6% up against the US dollar after this move. Let's look at the numbers now, starting with that Australia. After that rate hike, the market dropped 0.92%, almost 1%, reacting negatively to that. The Nikkei 225, however, on the flip side, 0.12% in the green. Kospi also in the green, almost 1%, 0.91%. Hang Seng Index is up also 0.20%, and Shanghai Composite is also green, looking good at 1.14% at the close of trade. Let's take a break now. When we come back, we'll head to the African continent and stay there for the rest of the program. This is Business Incorporated on Channels Television. Welcome back to watching Business Incorporated here on Channels Television. The United States Agriculture Department anticipates a 7% increase in Nigeria's palm oil production for the financial year that runs from October 2023 to September 2024. Production is estimated to climb to 1.5 million metric tons from 1.4 million metric tons this year. But what are the reasons, what's driving this increase, and what impact will it have on the palm oil production in Nigeria and, of course, the economy generally? We have Victoria Momo attempting to answer some of these questions and a whole lot more. Victoria, good afternoon. Thank you for joining us. Well, this is good news, I mean, for a change. We have this positive projection, but how much impact can we expect this 7% increase to bring to the economy?
Thank you, Ini. Thank you for having me. You see, palm oil production is actually a very good thing. And then here we have the projection, 7% increase in palm oil production. We expect that this palm oil production would actually, impact the economy in terms of reduction in import bill, because palm oil imports actually has dipped in the last year. That's the last 2022. In the last 9 months of 2022, it dipped by 32%, and this is due to increased local production of palm oil in the country. And this local production is actually driven by strong demand for locally produced palm oil in the country, especially as the forex restriction was imposed in palm oil importation, and as well as the depreciation of the naira, which made it very difficult and very expensive for people to source palm oil and import it into the country. So it is expected that the production of palm oil will continue to increase in the 2023 to 2024 season, driven by expansionary projects by major industry players in the palm oil industry, as well as increased government initiatives to smallholders, which contribute, 80% of palm oil production in the country. And of course, like I said earlier, it would impact the country's import bill and also help the country to reduce the currency pressures.
So, on the other hand, there's a leading fast-moving consumer goods producer that has announced it's gradually exiting some of those household items, which places demand on palm oil. How do we expect this to affect, the industry, the palm oil industry in the country?
It is safe to say that Unilever, which is one of the leading fast-moving consumer goods sector in the industry, in the fast-moving consumer goods sector, actually exited from the industry, and one of the products, or some of the products that were actually affected by this exit, are actually Omo detergents, Lux, Sunlight, were actually affected. And then this is due to the fact that there are new entrants in the industry, and these entrants actually come with the strategy of providing these products at efficient rates and also at a cheaper rate for the low income and middle income classes, and this has continued to increase the production of this detergent, as well as the demand for the detergent. The emergence of this new entrant actually has kept the business environment unstable for Unilever, and has led to the exit of the company from the industry. Unilever is a major buyer of palm oil, and they use it for many of their products, both palm oil and its derivatives. They use it for many of their products. So the exit from the market would actually, reduce their consumption of palm oil. However, with with more companies entering into the market and, producing more detergent, we would see the increase in palm oil offset that of Unilever, and also contribute to, the production of palm oil, encourage the production of palm oil in the country. Meanwhile, there are risks to, the projected increase in palm oil in Nigeria, one of which is the climate risk due to the unpredictable rainfall patterns, as well as insecurity in the regions where palm oil are being produced.
All right, Victoria, thank you so much for giving us that background information on those issues concerning palm oil. Enjoy the rest of your day.
Thank you for having me.
All right, let's look at other stories now. Here in Nigeria, Nigeria's dollar bond posted the biggest losses in emerging markets after Nigeria signaled its plan to remove energy subsidies could be delayed beyond an earlier June 1st deadline. That story came in last week. Debts due 2051 fell almost 2 cents on the dollar to post the worst performance among 645 bonds in the emerging market sovereign index. 11 other notes with different maturities from the nation figured in the 20 largest losers after Lagos-based reports showed that the plan had been put on hold. Remember, that story was last week when the federal government had said that there'll be a halt on the removal of fuel subsidies. African countries, including Ghana, Gabon, Guinea, Rwanda, Tunisia, and Zimbabwe, have signed a declaration on data and digital identity interoperability to advance their digital and economic integration and prosperity objectives. The sextet, as foundation members, signed the Smart Africa Trust Alliance declaration recently during the Transform Africa Summit 2023, organized by Smart Africa, Rwanda-based tech initiative, backed by some African leaders to spur and speed up the socio-economic development and transformation of the continent. SATA is a collaborative initiative aimed at fostering trust and promoting secure and responsible digital transformation on the continent. According to a release from Smart Africa, the declaration specifically intends to encourage the adoption and expansion of digital public goods, streamline digital integration and data sharing, as well as encourage development of digital identity ecosystems. All right, so today marks a new day in the NGX. After COVID, we saw that the stock exchange in Nigeria went on virtual e-transactions most of the time. But now the floor opens to in-person trading fully from today. We have our correspondent there, Anita Edet, to tell us how that is going on. Anita, just tell us what's going on there. We know that they've been coming twice a week for in-person trading. So now that it's fully open, what's going to be different? What can we expect?
Yeah, hi, Nii. Good afternoon. Yeah, at the Nigerian exchange, full physical trading activities has resumed, and this is coming after about 3 years now. The market was closed to physical contact trading as at March 2020. So it's more like a historical resumption. So what they'll be expecting is that we'll be having more people coming to the market, although at some point there are some traders who say the convenience of working from home or trading from home will be removed, but nevertheless they still want that physical interaction for the market. And pre-COVID, we had the market's performance was rising. Then at the same time, we also had the impact of COVID taking its toll on activity at the market. So what we're expecting, or what some of the traders expect, is that the market will have an increased volume of activities here, talking about physical trading on the NGX.
All right, Anita. Well, looks like it's not coming out very smooth there, but we promise. Thank you so much, Anita, as you head back to the office. Of course, we'll be expecting here on Channels Television give you a better picture of how the reopening to full in-person trading looks like today at the NGX. So do stay around here on Channels Television. We'll bring you some of the sights and sound from the floor of the NGX as it opens fully to in-person trading. Well, just before we go on the program, we will tell you what's going on in Zimbabwe, and that is that the country is getting set for its digital gold tokens, which will be introduced on May the 8th. That's according to the governor of the Reserve Bank of Zimbabwe. It can be used as a means of payment and also a store of value. Zimbabwe's economy has imploded, with the currency tails spinning by more than 70% in the past week, shortages of foreign currency have worsened the country's monetary crisis and also inflation. With the new currency, which is gold-backed digital tokens that will ultimately be used for transaction settlements and other payments, the central bank hopes this will help fight inflation and incessant value losses by its units of exchange, the Zimbabwe dollar, by mopping up excess liquidity. The Zimbabwe digital tokens, which the central bank says will be backed by physical gold held by the bank, will be issued for investment purposes with a vesting period of 180 days. The tokens will be available for sale through banks in both foreign currency and Zimbabwean dollar. Banks will create dedicated or specific accounts for the holding of the gold-backed digital tokens, which will be e-gold wallets or e-gold cards. That's it on the program today. Thank you so much for being a part of Business Incorporated. We'll do it again tomorrow, but do remember to get the full details of that in-person opening at the NGX here on Channels Television. I'm Ini John Mekwa.